Hey, what's up you guys? Welcome to my channel. My name is Erie Bandis. Yes, it's like Lake Erie. Introduce myself like that to everyone, so I figured I would do the same courtesy to you guys. Just a little background on myself. I'm a software engineer in Chicago at a data company. I've been in the industry for about a few years now. I have an undergraduate degree in computer science and a master's degree in computer science too, where I actually specialized in machine learning, artificial intelligence, software engineering, and I actually dabbled a little bit in cryptography. So the purpose of this new channel is actually to spread tech and financial knowledge when it comes to cryptocurrency. This is not financial advice. This is just everything knowledge related to financial and tech related stuff to cryptocurrency. I'm hoping to provide my financial and tech perspective when it comes to cryptocurrency. So if you like learning about cryptocurrency, or you're new and you just want to get involved and figure out what exactly the hell a Bitcoin is, what an Ethereum is, and what to do about it, hit the subscribe channel below. It'll tell me that you're interested and that I should continue to make more videos. So in this video, I'll be covering the new potential Bitcoin ETF that's slated to be listed on Tuesday, the importance of an SEC approval of this ETF, what this will mean for the entirety of the cryptocurrency market, and what I myself am doing about it. An exchange-traded fund, or ETF, is a security that tracks either one individual security or a basket of security. An example of a famous ETF you've probably heard of goes by the ticker SPY, S-P-Y. This tracks the S&P 500 index, which is just an index chosen of the 500 largest companies that is handpicked to be involved and is a good indicator of how the stock market is actually doing. You might have heard in recent news that Tesla was added into this S&P 500 index, so you probably have heard about it. If not, you already know about it. As of now, you've probably heard that a Bitcoin ETF from ProShares is slated to be approved and start listing by this Tuesday. Now, what does this exactly mean? Well, first things first, it's not necessarily a Bitcoin ETF, it's a Bitcoin futures ETF. I want to make that distinction right now, and I'll get into what a futures ETF is versus a regular ETF. But for now, I want to make that distinction because I've seen a lot of people spread misinformation that this is an actual ETF and that this is being approved. So what's the difference between a futures ETF and a regular ETF? Well, the regular ETF I've kind of already covered with the example of SPY, which tracks the S&P 500 index. There's a lot more different kinds of examples and a lot more different assets that it could actually track, but we're just going to stick to that example for now. Now, what's a futures ETF? A futures ETF essentially tracks the derivatives market. And this gets a little bit more complex where it gets into futures, which I'll cover very broadly. I'll link some articles in the description below where you can learn more about futures, but I'm just going to cover it very surface level. But essentially, a futures contract is essentially a contract that says you are under the obligation to buy an asset at a certain time period for a certain price. So let's use the example of Bitcoin. You might buy a contract for the premium and say that you think Bitcoin will be at least 60,000 by November 1st, and you will buy the contract to buy Bitcoin at 60,000. Now, why would you do that? The reason you would do that is because if you think Bitcoin will go even higher, to the moon, right, and Bitcoin will go to 70,000, then you will be under the obligation to buy Bitcoin at 60,000, which means that you just now made a profit of 10,000 because you were able to still buy it way cheaper than it actually is. So what is a futures ETF? The futures ETF essentially tracks the future contracts, the prices of those, which tracks the underlying price of the asset, which is Bitcoin. It's pretty complex. It's like a derivative of a derivative, essentially. So whoever runs this ETF, in this case, it's ProShares, who's releasing a Bitcoin futures ETF on Tuesday. ProShares will just buy the contracts and they will roll over these contracts after every time period. They're then not under obligation to purchase the underlying asset of Bitcoin. That's a very important distinction. There's actually no direct impact on Bitcoin, and we're going to talk about that more later in the video. So what's the benefit of a futures ETF? Well, the benefit of a futures ETF is essentially you still want to have exposure to an asset, but you don't want to have the obligation to actually buy the asset. A perfect example of this is commodities or things like oil, where you can still trade on the price of oil, but not actually need to buy oil or any other asset related to it. Now let's talk about Bitcoin and Bitcoin's futures ETF that's being slated to be listed on Tuesday by ProShares. Whoever buys into this ETF is buying an ETF that tracks contracts that track the underlying asset. This has no direct exposure to Bitcoin itself. What this means is whenever people buy into this ETF, There is no price impact on Bitcoin. This is just tracking a derivative of Bitcoin. This is a very important distinction because if this was a regular ETF, then they would be under the obligation, anytime someone buys into, let's say, a regular Bitcoin ETF, the firm would be under obligation to buy that Bitcoin on behalf of the trader or investor and hold it for them in custody with Coinbase custody or many other examples of custody when it comes to cryptocurrency. But this is not the case here. If they were actually having to buy real Bitcoin, that would have a price impact on the market. But because this is a Bitcoin futures ETF, it's not impacting the market as much as people think. I want to make that distinction because I've seen so many people on Reddit, YouTube, especially TikTok, of people saying this is great news that a Bitcoin ETF is being approved, and they keep saying just Bitcoin ETF. They don't make the distinction that this is a Bitcoin futures ETF, which essentially is saying that there is no Bitcoin being moved around. Now, that doesn't mean that this is bad news or that this is even neutral news. This is still good news. And you might be wondering, why is this good news? I mean, if Bitcoin's not actually being moved around, it's not affecting the big price of Bitcoin, who the hell cares? There's two reasons why this is actually very important when it comes to the price of Bitcoin. One, unfortunately, there is a lot of misinformation that is spreading. Like I said, I've seen a lot of people across all social media platforms spread that this is a Bitcoin ETF and it's going to make the price soar. Because people have that assumption, it kind of ends up becoming like a self-fulfilling prophecy. That's kind of one indicator, is that you don't want to go against community. I've learned that in the past, that community is very strong, whether it's through AMC, GME, Doge, whatever it might be. If people want to push the price up, they will push the price up. And if right now there's a lot of news going about a Bitcoin ETF coming up and people believe that the market is going to go up, then the market might go up. The second reason that this is still a big deal is the fact that the SEC has approved this. In the past, the SEC has rejected ETFs, any ETFs, futures or regular, for Bitcoin plenty of times. There's been many firms that have tried to release an ETF and it just hasn't been approved. Now, especially with the new SEC commissioner, Gary Gensler, who is actually used to be an MIT professor who taught cryptocurrency, blockchain, and actually finance in cryptocurrency, he is the chairman of the SEC. So now you would think he'd probably be more pro-Bitcoin because he taught about cryptocurrency, he taught about financial investing, but it's not necessarily the case. He has brought up concerns about having a regular Bitcoin ETF. And the reason for that, he believes, is because there's still not a lot of regulation, there's not a lot of infrastructure for cryptocurrency. He even cited the cyber attack against the Colonial Pipeline, where they asked for ransom in Bitcoin, as an example of how prevalent crime is in blockchain, which is kind of dumb. We can get to another video, but as a quick thing, everything is public on the blockchain. You would never want to transact in Bitcoin if you are a criminal, because if people have access to your address, they will see everything. Gary Gensler, maybe he knows a lot more than me. This is what he cited as an example. So he's not too keen on the idea of having a Bitcoin ETF yet. He believes that it is poised to receive a lot more manipulation, and he's trying to, from what he says, protect the investors, which I do believe. I think there isn't enough infrastructure yet when it comes to cryptocurrency. I mean, when you think about cryptocurrency, it's only been around, at least with Bitcoin, it's only been around about 12 years. A lot of other cryptocurrency tech is still very new. I highly doubt that the government and everything else is ready to regulate that on such a large scale when you talk about investors being able to trade that into ETFs. Now, this is actually still a big deal. It's not a regular Bitcoin ETF, and it's a Bitcoin futures ETF. But the fact is, the government is now growing more warm to cryptocurrency. This tells investors that, hey, investing in cryptocurrency is not as bad or risky, and we don't have to worry about Uncle Sam banning it. So while it's not a Bitcoin ETF, it's a Bitcoin futures ETF, it'll still give people exposure to Bitcoin and its underlying price. It won't necessarily move the markets when they trade on that ETF, but this is still a good sign. So it's for these two reasons regarding community and SEC approval, and that there's not really as much risk to banning cryptocurrency now like you see in China. These two things alone, I think, will cause the price to go higher. Or has the price already gone higher? The reason I say that is because there is the chance that Bitcoin is already priced in. And what that means is people were expecting this ETF, this futures ETF, to get approved. They've been expecting it for weeks because there was indications from Gensler, the comments that he made, people from the SEC, and a lot of inside sources that say this ETF is allowed to get approved. SEC won't step in the way of this Bitcoin futures ETF. So because of this news, it kind of became something where Bitcoin started to already go up. Based on all these news inside sources, you saw as soon as Bloomberg released that article and all the other news stations started to release their articles citing Bloomberg with their inside sources, the price of Bitcoin started going higher. We're reaching pretty much all-time highs almost. We're still trying to break that resistance of 64K. And it's hard to know if we are going to break it. There's always the possibility that we can go higher, right? There's a lot of bullish sentiment now. Now, it's not to say that it will go higher. It could always go down, but there is a possibility. If you look in the past few months, there's been a lot of FUD. FUD being fear, uncertainty, and doubt. There's been a lot of bad news, whether it's with Evergrande or inflation or just other problems that are happening in the economy right now. And honestly, it hasn't really impacted the markets. It impacted the S&P a little bit. There was a bit of a pullback, but now you're kind of already starting to see it go back. So the fact is, there's not really much else right now that could happen as a catalyst that will bring Bitcoin down. If anything, it's more poised to go up. I'm not saying this is not financial advice. I'm not telling you to go throw all your money into Bitcoin and it's going to go up guaranteed, because that's not what I'm doing. And I'll talk about in a little bit exactly what I'm doing about all of this. But I wanted to make that distinction. Bitcoin very well might go to 100,000. It's hard to tell, right? But that's kind of the number that everyone has been talking about, is 100,000 Bitcoin. It might even get to like 95,000 and then dip before then it gets to 100,000, because people are going to try to sell before it actually gets to 100,000, because they know a lot of people are going to, there's that psychological barrier of 100,000. There's really no other reason other than it's such an even number that people want to hit 100,000. It's just a psychological thing. And then what does this mean for altcoins? Well, right now, if you've seen, Bitcoin dominance, which is basically the market share of Bitcoin in the whole cryptocurrency market, has continued to go up. It's probably gone around from like 40% to like 47%. So meaning right now, Bitcoin is mainly the asset that has been moving the most. What this usually means, money will flow down from Bitcoin to large alt cap coins, to mid cap coins then, and then to small and micro cap coins. The altcoins will most likely be soon to follow. That is just the normal trend that we have seen. That's not to say that it's always going to happen like that. Like I said, don't throw money into obscure coins. But then again, what do I know? Shiba has continued to go up and up and up. And I also could have invested in Doge when it was 0.003. And I didn't. And then it went up to 72 cents. Because in my mind, I was thinking, who's going to invest in this? And people actually did. And I realized the power of community. And I realized that, wow, investor sentiment is a real thing. Yeah, I realized the power of TikTok and YouTube and everything else. And people really made the price of Dogecoin go higher. You could make a lot of money, but you have to remember, you could also lose a lot of money. If you look at the market in the past year, 2 years even, the market has been ripping through. It's been going up higher and higher. Sure, we had that large crash in May, but we've pretty much recovered all those losses now, and we're going even higher. Some coins, even for me personally, have 170x'd. That means you've made 170 times your money. Times your money. That is a huge deal. It's not to say that it can't go higher, right? And this is now where I get into like what I'm doing and what I see. I think in the short term, Bitcoin can go higher. How much higher? I don't know. You know, it could go 50% more, 2x, which is 100%, triple. I don't know. I've been proven wrong before. Hell, I was actually bearish, and I thought Bitcoin was going into a bear market, and now we're having a repeat of basically of 2013 and a double top. This is not me trying to make predictions and say, hey, this is for sure going to happen like other channels do and shit, like this is for sure going to happen, this is what you should prepare for. I don't know. It could honestly just hit 64K as a resistance and continue a bear market. No one knows things for sure. You need to make your own research and do your own research. You need to compile whatever opinions you see, whether it's my opinion or other YouTubers or TikTokers. You need to look at the market, whether it's on-chain analytics, fundamentals, do your own research, and come up with that price. But in the short term, yeah, I think Bitcoin is poised to probably go up to 100,000. I think there's a lot of bullish sentiment. There's nothing really stopping in the way of Bitcoin going higher. I don't know if 2 or 3x is reasonable. The main reason I say that is because the cryptocurrency market, at least when it comes to Bitcoin, has grown. It's a lot harder to move Bitcoin now than it was before. Bitcoin's market cap is probably around 1.2 trillion now. In order for it to double or triple, you're basically saying you need to find trillion to $2.4 trillion to put into this asset. I don't know if enough institutional people are going to invest in it because honestly, there's not enough retail investment to really make that price go that high. I think 100,000 Bitcoin is more likely than 135, 200,000 that you've seen from a lot of people right now. But like I said, I think there's always an option that it's gonna go down. That's why I've taken a diversified approach. I haven't really done all in or all out. For me right now, I have 40% of my cash put into cryptocurrency and then 60% sitting as cash. This doesn't include retirement funds or stocks or anything else. This is just money that I had made before from cryptocurrency that I sold and things like that and reinvested at lows. So yeah, I've invested 40% of my cash, 60% is still sitting on the side, but I am dollar cost averaging into the market every 2 weeks, basically lining it up with my paycheck. Some of that as cash that I have sitting there and some of it just from my paycheck. The reason I'm doing this is because I can't predict the future. I can't know how much higher it's gonna go or things like that. I'm just dollar cost averaging into things that I think will be around 5-10 years. I'm not trying to time it completely. Now this 40% that I still have in, that I am trying to time. And I can talk about it in another video exactly how I try to time this market because I do believe it is very cyclical. I also think you don't want to time the stock market, but I think you can, to some extent, try to time the cryptocurrency market. I genuinely believe that. The main reason being is also it's a very volatile market. I mean, if you look back in May, we dropped like 50% in basically a day. Asset class is still very new, very volatile, and people are willing to sell it off right away, right? Just right away. And I think, why would I want to hold an asset all the way to the top and then ride it all the way back down? Because if you saw with some altcoins back in 2017 or 2013, they went up 170x, like those other assets, but then they came down like 99%, and then they never saw all-time highs again. Because we're in a place where this is kind of like the dot-com bubble, where you're seeing a lot of assets just go up purely off speculation. Hell, we have meme coins that have generated dozens and dozens of billions of market cap and value. That is insane to me, right? I think we're going in a lot of speculation right now and not a lot of actually use. And trust me, I have dozens probably of exchanges and decentralized exchanges I've used. I've taken loans, I've participated in DeFi, I've done governance, I've staked, I've done everything. I've done mostly everything in cryptocurrency that there is right now. And honestly, let me tell you, it's very hard to use. I'm someone with a tech background and I just am naturally nerdy and techie. I have spent a lot of time with cryptocurrency, but I would never expect my friends to do it, let alone my parents or my grandparents. Like, there's just no way we could expect them to do it. So as of right now, a lot of this is kind of run on speculation. Right? Not many people are taking loans from DeFi for actual use cases. A lot of this is also just very, very, very speculative. What that means is that it makes it more risky and it's more prone to be volatile, which we have seen with the cryptocurrency market, and which means that the asset might drop 50% in a day or go into a bear market for years. For me, I'm fine, and I try to make myself feel fine. It's hard when I don't have all my money put in like before and I continue to see Bitcoin going higher and higher. Even though I have pretty much half my money still in cryptocurrency and it continues to go higher, I'm always thinking like, damn, I should have put more in. But hindsight's 2020. You can't predict it. I know for me, I would have felt a lot worse if I had all my money in and it just went down 90%. This is how I diversify. You have to find your own risk tolerance. Some people, like I watch Graham Stephan, he puts in 5%. Other people I know put in 1%. And then there's people that put in 100%. I used to be one of those people. I think for me right now, I think the crypto market can still go up. I just don't know by how much. I don't think it can go much higher. And I think the crash, and I think there will be a crash, will come at a moment's notice when it's unexpected and people will lose a lot of their value. I think it will go even lower than what it is right now. To me, it's not worth it. Considering When I started investing in cryptocurrency about a year and a half ago, and I did research even years before that, I started investing real money a year and a half ago. And to me, I saw that the market could go up so much more. I mean, it couldn't really go much lower in my mind for a lot of the cryptocurrencies that I was investing in. That was just based off my own research. And I felt like it was less risk. Now with how much it's gone up in the past year and a half, I feel like there's definitely a lot more risk. There's just like, if you like look at the scale, it's a lot more likely to go down, in my opinion, than it is to go up. Or there's a lot more losses to be made rather than gains to be made. So for that case, I'd rather keep a diversified approach where I put 40% of my money in. That way it still rides up, and if it goes down, I don't feel terrible about it. But that's just the decision that I made based on my own financial situation with, paying for rent, for just everything I need to do with living, but also student loans that I have garnered from undergraduate and graduate degree. That's just my level of risk tolerance. Like I said, the market can still go up, might make a lot more money, or it can go down, right? And I can talk about it in another video exactly how I plan to prep for this bull market exactly, and how exactly I plan to prepare, which I'm even more excited for, is the bear market. Because let me tell you, buying Cardano at 10 cents, or VeChain at 1 cent, or Matic at basically 2 cents, less than 2 cents, and then staking it and returning yields on it, and generating all that money over years when things are so low, and then just seeing it go up multitudes and multitudes, things that you would never imagine in the stock market. And I'm very bullish long-term on cryptocurrency, right? I don't know how many assets will actually still be here 5-10 years from now, but if I were to pick two, Bitcoin, Ethereum would definitely be the ones that I think are long-standing, and ones that I am going to accumulate as much as I can moving into the future. And yeah. So thanks guys for watching the video. I really appreciate it. If you have any comments, any feedback in general, just please leave in the comments. I do really want to improve. This is something honestly that I enjoy doing. I have combined a lot of hobbies into this one hobby that I'm trying to do right now. And I could talk about that in another video, which I've said a multitude of times, but I have so many ideas. So please stick around, leave your comments in the comments below so I can improve. Subscribe if you want to see more content like this, and please hit the like button because that actually does help spread it with the YouTube algorithm. I greatly appreciate it. Thanks guys, have a good one, bye.